everybody, and welcome to the Wealth Card Show. I'm your host, Tom White. Another volatile week as we end the quarter, and things were not looking too good as we head into this week. We'll take a look at that now at our economic mechanics. And when we last left you last week, our market gauge was indicating strength in the U.S. dollar as well as the Treasuries. Had some weakness in the stock market, the Dow Jones Industrial Average, as well as the Commodities, CRB Index. Let's take a look at this week and see how we did. And we begin with the U.S. dollar. And on the daily chart of the U.S. dollar down below, point number 1, the stochastics are looking stronger again. We got a bullish signal here, and we're reaching toward the 80 line. Gave this one a green mark. Above that, point number 2, got some strength here in the MACDs as the green line is separating from the red line. And the histogram bars are rising too. We gave this one a green mark. Up top, the relative strength index is challenging the 70 line. It's had some problems there before. Till we can pass there, we gave this one a yellow mark. And over on the weekly chart down below, point number 1, the stochastics have challenged and beaten that 80 line. Looks like we're losing a little bit of steam, so for now we gave this one a yellow mark. Above that, point number 2, the MACDs are still looking strong and the histogram bars are rising, so we gave this one a green mark. And up top, relative strength index is nearing the 70 line, but it's losing a little bit of steam too, so we gave this one a yellow mark. And summing up the US dollar, we analyzed the daily chart and the weekly chart. On the daily chart, we found the stochastics and the MACDs were bullish, and we gave them a green mark. Relative strength index was neutral, we gave that a yellow mark. And over on the weekly chart, the stochastics were neutral, we gave that a yellow mark. MACDs were bullish, gave that a green mark. Relative strength index was neutral too, so we gave that a yellow mark. And for a total, we had 0 red marks, 3 yellow marks, and 3 green marks for the US dollar. Still looking strong. And we take a look now at the commodities represented by the CRB Index. And on the daily chart of the CRB, down below, point number 1, those stochastics were challenging the 20 line and they failed. They're heading lower right now. We gave this one a red mark. Above that, point number 2, we got confirmation as the MACDs continue lower and the histogram bars, they're looking negative. We gave this one a red mark. Up top, relative strength index is riding along that 30 line. It's heading lower too, so we gave this one a red mark. And over on the weekly chart, down below, things are not looking good at all. Point number 1, the stochastics, we failed that 50 line. We headed lower. We're challenging that 20 line now. Looks like we're going to blow right past it. We gave this one a red mark. Above that, point number 2, we got confirmation and negativity of the stochastics with the MACDs as they're heading lower, and the histogram bars are dropping too, so we gave this one a red mark. And up top, relative strength index, challenging the 30 line now. Looks like we're going to probably fail this one. I don't know. We'll have to wait next week and see. But for now, we gave this one a red mark. And summing up the commodities, we analyzed the daily chart and the weekly chart. And this was real easy. It was the same as last week. We had negativity on both sides. We had red marks on the stochastics, the MACDs, and the relative strength index on the daily and the weekly charts. For a total, we had 6 red marks, 0 yellow marks, and 0 green marks. And it looks like the negativity is going to continue for the commodities, at least in the short term. And we look now at the 10-year Treasury yield. And looking at the daily chart of the 10-year Treasury yield down below, point number 1, the stochastics are giving us a bearish signal as the green line is crossing over the red. Gave this one a red mark. And above that, point number 2, we're losing steam on those MACDs, the lines, and the histogram bars are flattening too, so we gave this one a yellow mark. And up top, relative strength index is failing the 50 line. It's headed lower. We gave this one a yellow mark. And a look at the weekly chart of the 10-year Treasury yield down below. Point number 1 is stochastics. Trying to show a little life here as the green line crossed over the red, but it's still negative and well below the 20 line. We gave this one a red mark. Above that, point number 2, the MACDs are continuing in decline, but the histogram bars are rising a bit, so we give this one a yellow mark. And up top, relative strength index in point number 3 is challenging the 30 line, but until it passes it, give this one a yellow mark. And summing up the 10-year Treasury yield, we analyzed the daily chart and the weekly chart. On a daily chart, we found the stochastics were negative, and we gave them a red mark. MACDs and relative strength index, though, they were neutral. We gave those a yellow mark. And on the weekly chart, we found the same thing. Stochastics negative, gave him a red mark. MACD's relative strength index neutral, gave him a yellow mark. And for a total, we had 2 red marks, 4 yellow marks, and 0 green marks for the 10-year Treasury yield. And now we take a look at the Dow Jones. And on the daily chart of the Dow Jones, down below, point number 1, the stochastics got a bearish signal as we challenged the 50 line and failed. Green line crossed over the red, and we were also in a downtrend with the stochastics too, so we gave this one a red mark. Above that, point number 2, MACDs, they're negative as they crossed, and the histogram bars fell below the 0 line. We gave this one a red mark. And up top, point number 3, the relative strength index failed the 50 line and is headed lower. We gave this one a red mark too. And over on the weekly chart down below, point number 1, the stochastics, headed lower again. We got another bearish signal, another challenge of the 20 line. We gave this one a red mark. Above that, point number 2, the MACDs continue lower, but the histogram bars are lifting just a bit higher here, so we gave it a yellow mark. Up top, relative strength index in point number 3, it's zigzagging up to the 50 line, so we gave it a yellow mark. And summing up the Dow Jones, we analyzed the daily chart and the weekly chart. On the daily chart, the stochastics, the MACDs, and relative strength index were all negative and bearish. We gave them a red mark. And on the weekly chart, the stochastics were negative and bearish. We gave a red mark, but the MACDs and relative strength index neutral. We gave those a yellow mark. And for a total, we had 4 red marks, 2 yellow marks, and 0 green marks for the Dow Jones. Looks like the volatility is going to continue from here. And so we've been coming up with scores for the US dollar, the commodities, the 10-year Treasury yield, and the Dow Jones, looking for where the strengths are and where the weaknesses lie. We did that by weighing the number of positives against the number of negatives and coming to a conclusion that way. And this week, for the second week in a row, it's the US dollar. Had 3 green marks, 3 yellow marks, and 0 red marks. And in second place, it's the 10-year Treasury yield, 0 green marks, 4 yellow marks, and 2 red marks there. We got the 10-year Treasuries doing well as the Federal Reserve is purchasing 10-year Treasuries, keeping the 10-year Treasury yields low. And in third place, Dow Jones Industrial Average, we got 0 green marks, 2 yellow marks, and 4 red marks. But that's an improvement over last week, but it looks like the volatility is going to continue here. Commodities came in last place, 6 red marks, 0 yellow marks with 0 green marks. Looks like weakness from here on the commodities. Looking like a good place to be as of right now. And a look now at our market gauge. The object is to be as far in the right column in bullish territory as possible and as far away from the left column in bearish territory. And this week, the second week in a row, it's the US dollar coming right between neutral and bullish territory as people are selling off assets and going into cash. And in second place, the 10-year Treasury yield being kept down lower by the Federal Reserve as they're selling off shorter-term assets and purchasing longer-term assets to keep yields lower. And in third place, it's the Dow Jones Industrial Average, a little better improvement from last week, but still looking volatile. Commodities came in last place, 6 red marks there. Not a good place to be right now. The commodities don't look volatile, they just look negative altogether. That's also pushing the US dollar higher as the commodities and the dollar go in opposite directions. But that's all from our show this week. Tune in again next week and we'll do it again. Feel free to give a call, 303-818-7807 if you'd like to take some personal educational lessons or if you have any questions. But for now, I'm out.